Hey, Run the Numbers friends. Happy holidays. This pod is a treat. It's part of our Mostly Classics collection, one of the most listened to episodes of 2025, and it's with my friend Russell Lester, the CFO of Tropic and former CFO of Calendly. Not only is this guy an amazing CFO, he's a pro when it comes to analogies that stick. He explains the concept of spoilage, which is deployed capital that fails to deliver its intended value. He also talks about levers, or positive actions that force multiply your efforts, and leakages, or headwinds that sap momentum. Russell is often thought of as the Chief Alignment Officer at Tropic and breaks down one of my favorite frameworks of the year, the Center of the Table framework. All this and much, much more with the world's biggest Star Wars fan, Russell, after a short word from our sponsors. Did you know that around 40% of manually processed invoices contain errors, missing data, bad codes, duplicates? And those mistakes don't just slow your finance team down, they cost you money. That's why global finance automation matters. It's not just about saving time, it's about keeping your business safe from costly errors. And that's exactly what Tipalti does. Tipalti is the serious AP solution for serious business. Tipalti automates the end-to-end payables process, handling everything from onboarding suppliers to global payouts, all so your finance team can breathe again. More than 5,000, of the world's most ambitious businesses already rely on Tipalti to make payments in over 200 countries and 120 currencies. With baked-in security and tax compliance, Tipalti gives you the confidence to scale globally without adding extra finance headcount. Give your finance team their time back. Don't let bad invoices drain good money. Visit tipalti.com/runthenumbers. Tipalti.com/runthenumbers. Tipalti, serious AP for serious business. So if you listen to this podcast, you'll know that I am incredibly passionate about the FP&A space because that's the route I went to get to CFO. And I want to tell you about a tool that has exploded over the past few years. It's called Aleph. And I remember getting outbounded by them about 2.5 years ago, and I actually took the bait because they claimed to be able to do a demo with my live data, with me right there on the call. And so I had to see it to believe it. And it was the founder running demos back then. Shout out Albert, hope you're listening. And he connected my NetSuite and built my P&L using their Excel add-in in like 15 minutes. And I was really impressed. Since then, Aleph has gone on to raise money from some of the top VCs out there, and they've built an impressive roster of customers. Many of their customers have been on the podcast, like the CFO at Turo, 8 Sleep, and Zapier. They're all really big champions and supporters of Aleph like me. But it's not just an Excel add-in. Aleph also allows finance teams to work with their live cross-system data using Google Sheets and their web app. And that's cool because it gives teams the option to support a wide range of needs and workflows like budgeting, forecasting, and variance analysis. And speaking of variance analysis, they're doing some really cool things with AI-powered variance analysis. It basically allows you to figure out what's going on and why, and it takes the time that you'd usually spend from hours to minutes. It's really cool. And so I highly recommend checking them out and taking them up on that demo or trial, just like I did back in the day. And you can learn more and get started at getaleph.com/run. That is getaleph.com. aleph.com/run. Tell them CJ sent you. A messy or missing cap table might not just slow you down, it could cost you your next fundraising round. VCs get flooded with pitches, and if your equity is confusing or missing, they'll move on fast. Fidelity Private Shares is an all-in-one equity management platform that helps you maintain a clean cap table, an organized data room, and a clear equity story. Schedule a demo at fidelityprivateshares.com. Mention Mostly Metrics and get 20% off. Russell, welcome to the show.
Thank you so much. Happy to be here.
So I've been a longtime fan and user, customer of Tropic. So I'm excited to have you here to jam out. But first, before we get to that, tell me a bit about that background there. Is that Star Wars?
That is Star Wars. I'm a huge Star Wars fan, and my son actually gave me this poster. It's not just a poster, it's signed by all of the original cast and George Lucas himself. And my son, who is only 16, he has a little side business. He made all the money that it took to buy that for me, and he gave it to me for Christmas.
No way. That's epic. Out of all the Star Wars movies, which one's your favorite?
Empire Strikes Back. That's the one.
That was going to be mine too.
Yeah. I mean, I was a kid during that. I'm aging myself, but I was a kid when it came out in the theaters, and I had all the toys that I got for Christmas, and it's like epic to be able to. And I haven't ever grown up from that, as you can see.
Well, it is a business show, so I'd be remiss if I didn't say that Star Wars must have the best business when it comes to like this reoccurring revenue stream that they make off of not just the movies but the merchandise, the experiences. It's like its whole world.
Yeah, it starts with a viral fan base, though, right? And the cool thing is that fan base had children, and they're creating a fan base of their children, and so you see these. Yeah, it's the gift that keeps on giving in that way.
It's got the network effects there.
Exactly.
Yeah, there were two big deals that I remember from the movie industry. One was when Spielberg did Jaws, I think. I think he actually paid for a lot of that out of pocket, and he wanted to get the residuals on it and like own the IP. And then the Star Wars series it's George Lucas, right?
Yes, George Lucas.
Yeah, I think he made a ton of money off the merch that came out of it, right?
Absolutely. And many people competed to try to get the action figures, and Kenner got the line. And the funny thing was that the Kenner action figures were kind of crappy.
Really?
They didn't have joints, if you'll recall. Their arms just do this. But they're highly collectible, and especially if you have like the original ones still in the container,
Cool. Well, I guess we can talk about some CFO stuff if we get time.
If we have.
All right. So we were preparing for this podcast, and I always like to ask people some concepts that they like to talk about. And I got to say, like, it blew me away, this concept of spoilage. I've heard about it maybe in the produce industry, but you have this excellent metaphor for deployed capital that's not doing its job. Can you just unpack what spoilage means?
Yeah, I'd be happy to. So I have 2 teenage kids, and I do the grocery shopping often for those teenage kids. And it's hard to keep track of what they currently like and don't like anymore. And so I find myself buying things, and their taste preferences are very high. So I go to the store, I buy the things I think that they like. I stock the fridge with it, stock the pantry with it. Inevitably, I go to clean up one of those, and I see all this stuff that I deployed capital to acquire, and it's literally spoiling, and I hate it, right? There's hungry people all across the world, and I'm having to throw away things I had deployed my scarce capital towards. So I started thinking about, business is no different, because what happens is leaders cycle in and out of a company, and they have passion projects or things that they believe are going to drive the strategy, and we deploy capital as CFOs. We say, okay, we'll stand behind that. We deploy that capital. Next thing you know, you look back a couple months later and you find that container in the fridge that's got that thing in it. You don't even know what it is because it's growing mold on it. And it's called like a software tool that never properly got stood up. It's called a marketing campaign that is not on the right tone or message of where the company is currently focused. And I call that spoilage, because it's similar to something that's literally rotting, not producing the intended value.
And how do you determine that it's spoilage? That is not to use another metaphor here, but do you have to use the smell test, or is it one of those things like it dies this quiet death where people just kind of stop talking about it? Like, how do you find it?
Yeah, well, you don't find it if you're not looking for it, first of all, or you're not smelling for it, to your analogy. But often what it looks like is something that no one has an update on. Like, hey, I know we deployed this tool. What's the update? And the responsible leader for that department's like, that's a good question. When you hear that's a good question, that's a polite code for I have literally no idea, and I forgot we even spent money on that. Or, as CFO, we need to hold the organization accountable towards, well, we hired this investment to produce ABC, XYZ. Did it produce that? And you know how rare it is that we actually look back and determine that. And you know why? It's because we're overwhelmed and busy and tyranny of the urgent. We just go and focus on other things. But it looks like a lack of connectivity to the current strategy, a lack of awareness around what is this investment even producing, or literally just sitting stale. So a tool that's not even being used, or an investment that we deployed that produced no new leads.
And it's hard to keep ourselves honest when it comes to investigating that feedback loop. A lot of times we will put the capital out there, we will greenlight things, but like there's no built-in mechanism for 9 months later. How did that CRM tools deployment? I guess you would know the CRM because very quickly like leads would be all over the place. But like other tools within the organization or like field marketing campaigns, how do you build that muscle into the org to have like honest conversations to say like whatever happened with that?
Yeah, I mean, obviously, as CFO of Tropic, we drink our own champagne, we use our own product, so we use our product to keep track of those things and keep them top of mind to be able to say what are the renewals coming up, what did this contract intend to purchase, what are we hiring it to do? Because part of the exchange of approving that investment is making the business case. So it kind of begins with having the rigor in place around justifying investments and ensuring you're clear what is the intended ROI of that investment, and circling back and saying, is it producing the intended ROI? But I think just waiting and seeing doesn't work. Finance inevitably has to be the one to proactively reach out and find out, is it producing what we had hoped it would produce?
In the tooling one, I mean, you hit that one on the nose. I think that's pretty obvious to people. There are probably people driving to work right now in their car and they're like, oh yeah, that tool XYZ, like totally, like that one didn't work. But like, what are some other examples? Could it even be headcount, like hiring for the wrong roles or hiring for something that's like the soup du jour?
Yeah, it could be anywhere. You know, it's funny. There's several places that money hides in a budget. And by the way, I have a marketing undergraduate, so I love marketing. I'm very pro marketing. But as a finance practitioner, we all know the team with the most variable budget in year is marketing. And sometimes it's somewhat undefined how they're going to deploy the demand generation budget. And it can be deployed towards events, sponsorships, trade shows, demand generation, SEO, SEM, you know, all these different things. And so you got to look under the hood of those things. But contractors are another area.
Yeah.
Because we look at FTEs, right? Full-time employees, we examine those, we rationalize the org chart. Contractors silently run through the P&L because they're not often like counted in the full-time equivalent. And there's just this professional services line. It's like, wait a minute. Oh yeah, who owns that? Particularly if you're allocating that all the way back to G&A, right? If you don't deploy the contractor fees to each individual department, ain't nobody watching it. And so it could absolutely be headcount, to your point.
I remember there were some contractors that were drifting around that were unfortunately hitting our cost of goods sold. And once I found them, I discovered it was worth 1 percentage point in gross margin.
Wow. I believe it. And you ask the question, what are these people doing? Oh, good question. I forgot we had that team.
It was a consulting retainer for a product that we were standing up. Yeah.
Wow.
Russell, what about strategy drift? And I bring this up because I sometimes feel like there's a sunk cost fallacy where people don't want to like kill off the things that aren't working. Like, oh, maybe we'll drift into this ICP that we think will buy our product, something like that. Can spoilage also happen when it comes to deploying capital against like going after different sectors or building out a new product?
Yeah, I mean, especially as of late, there's the trusted roadmap and there's long range planning. But I don't know about you or my colleagues out there, but I feel like we're in an always planning stage now where the sands are shifting so frequently that it's yes, it's important to do long range planning, but being very nimble and flexible to pivot in short range planning is important too, because really rarely do you strike the perfect strategic plan for the year. And we all have dreams of it. We're going to get the plan ratified by the end of the year. So we're going to kick off the new year. And then next thing you know, a couple weeks into the quarter, things aren't materializing the way you expected. And then suddenly strategic shifts and pivots.
Hey, thanks for listening. We'll be right back after a word from our sponsors. Are you running a small or mid-sized business? Then you need more than spreadsheets or basic tools. You need Sage Intacct, the all-in-one cloud platform for accounting, ERP, and financial management. It's built for businesses like yours across industries like retail, financial services, logistics, tech, professional services, and more. Sage Intacct outperforms QuickBooks, beats NetSuite on flexibility, and delivers fast ROI, up to 250% with payback in under 6 months. Rated #1 in customer satisfaction for 8 straight years. That's not luck, folks. It's Sage Intacct. Check out the Sage Intacct financial management platform using the link in the show notes below and take control of your growth. This episode of Run the Numbers is brought to you by Mercury, business banking for founders and finance pros who want their financial stack to actually work together. Now, I don't plug tools I don't know or intimately use. I've been a Mercury customer for a couple of years now. In fact, I showed the Mercury dashboard to their CFO, Daniel Kang, from their finance team right before we hit record on this episode. It felt like a full circle moment. And what I love most is that Mercury isn't just banking, it's operational confidence. I can send a wire to a podcast editor, I can check capital balances, and I can approve a payment for a freelancer who helped me with a tech stack report, all without bouncing across tabs or praying a PDF exported correctly. Mercury's making a bet on builders. Whether you're issuing your first invoice or wiring 7 figures for a warehouse build-out, it's banking that scales with your ambition. Visit Mercury.com to apply online in minutes and see why over 200,000, entrepreneurs choose Mercury to run their business finances smarter. Here comes my banking voice. Mercury is a financial technology company, not a bank. Banking services provided by Choice Financial Group, Column NA, Evolve Bank and Trust, members FDIC. The IO card is issued by Patriot Bank, members FDIC, pursuant to a license from MasterCard. All right, I got to get up on my soapbox for a sec here. Everybody's talking about AI-powered this and automated that. But here's the thing about revenue recognition. It's not just about moving data around. It's about getting it right, full stop. So RightRev is laser focused on one thing, RevRec that auditors actually trust. See, there's a difference between automating revenue processes and automating revenue recognition correctly. RightRev was actually built by the godfather of RevRec, who understands ASC 606 compliance, audit controls, data validation, and the flexibility needed for complex B2B contracts. We're not trying to be your billing system or your ERP. We're the revenue recognition engine that sits between your contracts and your financials, making sure every dollar is recognized correctly, on time, every time. Companies like Snowflake and Logic Monitor don't just need fast revenue reporting, they need revenue reporting that's audit ready from day one. And that's honestly where RightRev shines. And what I love about RightRev is they're not out there trying to be everything to everyone and just slap some, AI slop on top of it. While everyone is building these massive platforms that do everything in a kind of mediocre fashion, RightRev does one thing exceptionally well. They make sure your revenue recognition is bulletproof. Ready to stop gambling with your RevRec? Visit RightRev.com to see how we make complex revenue simple. That's RightRev.com, where revenue recognition actually works. Let's talk about shifting and pivoting. You've said that spoilage causes companies to scramble and then identify, I love this, levers and leakages. What's that?
Yeah, so I'm a nerd. I like science. As you know, a lever in physics is to force multiply effort. So I think of levers as positive things that you can do in the business. How do you force multiply your efforts to drive, let's say, improvements in your conversion rate? Or how can you apply a lever to improve throughput of a certain team from a capacity model perspective? So a lever would be an idea or a concept or a tool or a project that would improve a metric. Whereas a leakage would be something that is a headwind or a detractor where you're actually losing momentum for that metric. And every company has a myriad of levers and leakages. And I believe it is the job of the modern finance team to be the most well-versed across all levers and leakages and not wait for the other functional teams to come to them to parlay that information.
Oh man, this is great. Okay, we're going to really nerd out here. All right, first maybe, was it Archimedes who said, give me a lever long enough and I can move the earth?
Man, that's impressive. I think so. I think you're right. I trust you're right.
Someone's fact checking me with my Roman mythology.
Jeopardy. Who is Archimedes?
Yeah, exactly. I didn't do too well in physics. In terms of levers, what are some common levers around the business that finance should just be like, okay, let me run through my list here to see if any of these are ones that show up.
Yeah, I mean, I like to start sequentially at the very top of the funnel and all the way through the customer journey. So I'm an odd type of CFO that is very operationally grounded. And I think about the whole reason we're in business, of course, is to make money, but is to serve our customers. So I begin with the very top of the funnel. So where do we have opportunity to accelerate pipeline? And so you would look and you would say, well, which marketing investments are doing the best job of filling the pipeline? Do we need to have a balanced portfolio and be spending money equally across these? Or can we pull a lever and spend more money? For example, challenging your chief marketing officer to say, hey, you can pull forward budget from a future quarter if you can prove to me that you can drive more demand in the current market environment because content is really hitting hard right now with all the flurry of information about AI. So that'd be a lever from a marketing perspective.
This may be a counterintuitive take to some people, especially if you're in marketing out there. But my biggest pet peeve is when I set a marketing budget, programs budget for the CMO, and it comes up at like 84% achieved. So they haven't spent 16% of it.
Right.
And they're like, CJ, I thought you'd be happy. Like I underspent. I'm like, no. My model works off of you deploying the right amount of budget so we can get the amount of pipeline we need to close the deals with revenue. But if you don't spend enough, like the model actually falls apart.
Well, I love a budget conscious CMO, but this growth stage business that I'm used to serving as CFO, you have to take risks and you have to place bets. And sometimes the levers you pull don't produce what you hope that they're going to pull. A lever isn't a certainty. A leakage is almost certainly a drain, but pulling the lever doesn't always drive the impact that you hope or think because business is interconnected. So understanding the right lever to pull is also super important because whatever you drive upstream has a cascading effect.
Okay, and to continue to make it real, so we identified pipeline, trying to increase that is one lever. Maybe it's more demand spend to spice things up. Can you maybe name one more lever that you go through sequentially?
Yeah, I mean, I think of I guess we could pivot away from like growth and maybe over to the expense side of things. You could look at from a lever perspective, what are the tools that are paying off that we need to accelerate and do more of? So there's all kinds of investments in AI, and that is freeing up people's mind share. It's amazing, even for Office of CFO, what AI is capable of doing, summarizing board notes and prepping analysis ahead of time. And so that would be a lever. Some people might look at that as a leakage because you're going to deploy capital. But if it actually makes your team more efficient and frees up time, it's a lever. So a lever would be not just improving the top line, but actually creating efficiency in your P&L, which can be either from the revenue side or lower expense.
I like that a lot. I started to think, is that a leakage? But I know what you mean. Like if you can get more efficiency out of things, that goes a long way. And I think people make the mistake of thinking that AI is just a way to reduce headcount. I think some use cases like customer support, like, okay, that's right down the fairway. You can have less heads if you can reduce tier one customer support. But a lot of it is making people more efficient as a lever. So you're taking the same human and making them 20 or 30% better at what they already do.
Correct. And freeing up time, we all have these well-rounded financial practitioners that the worst thing that we could do is have them spending most of their time trying to prep the data or aggregate the data versus we want them interpreting the data and figuring out proactively, what does this mean and what should we do about it? So that would be a lever.
Okay, and then leakages was contractors. Was that a simple example of one of those?
Yeah, or think of just in simple expense perspective, a renewal coming up that you didn't intend to renew the software and it renewed. That's a leakage. Or
that's the worst.
Or two tools that are doing the exact same thing. Or why do we need a third project management tool?
I was going to use that example, Russell. Why do we need Asana, Monday, ClickUp, and Notion? They're all great tools, but maybe we don't need 4.
Correct. So that's a leakage because the tools themselves can be providing efficiency, but you don't need 3 of them.
I like it. What's the center of table framework? I just want to bring things together here. Does this apply to both the concepts we've already gone over?
Yes, these are all interconnected. And it's an unpopular, I've even had financial practitioners say, I completely disagree with your perspective on this. So the traditional budget management at very large companies would be, you're a budget owner, here's your budget, go manage your budget, have a good year. Each quarter we'll do the BVA, we'll determine where your variances are, and we'll report back, right? I don't think that works well for high growth, innovative companies that are in highly fluid markets. So center of table would say, as you identify these levers and these leakages, even if you're the one identifying it and it would benefit your group, you don't automatically just keep those dollars like, hey, I found some savings and I redeployed them into hiring another person. And so that's where it creates some animosity, because I hear people say, well, why would I identify it if I don't get to keep that? Well, maybe you do get to keep it, but don't you need to be a good corporate steward first? I call it front of jersey, back of jersey, right? Because team name is on the front, your name is on the back, you play for the front of the jersey. And so the point being that we want leaders that know they need to do what's for the corporate good. So as you find the levers and leakages and you have ideas, you reward that culture in your business and you push that idea to the center of the table. Then your decisioning body, which could be your executive team, determines what is the best use of deploying what we've now freed up. We've either unlocked more growth, we've identified more efficiency, but either way, the goal being that you unlock capital that you then reinvest. You don't just want to stick it on a shelf. That's not working capital. You want it to be at work doing something. And so the center of table is assuming you're putting all your chips that you're finding to the center for someone to deploy.
And I think you quickly find out the type of people you're working with when you have to make these decisions. Like, are these the people who are more interested in increasing the equity value that we all get to share in? Or is this the type of person that's trying to build a fiefdom? Because that is a difficult and mature conversation to have. That, listen, I know we budgeted for 15 heads in this department, but the way the company is moving and how we're doing against our goals, 3 of those heads may be better for us as a group to be put over here.
Yes, you know you're doing a good job as a CFO if you are creating the environment to have those hard conversations where trade-offs are being made and leaders are making their case one to another. And you're, amicably fighting that out at the table together to figure out what is in the best corporate good.
I think one of the worst things somebody can say to a CFO is, no, that's in my budget. Like, I understand that we made a plan together, but things change throughout the period. And that's like a very, I don't know, that's a back of the jersey type comment if you're coming to a CFO and saying, listen, that's in my budget.
It's in my budget is a very lazy way, right? And that's why some people like to start with zero-based budgeting. Or I saw a post this morning from, I think it was SaaS CFO, that was like, there's no zero-based budgeting. It's just called budgeting and it starts at zero. And you then build up from there and you say, hey, don't assume you have anything this year. Make the case for every dollar you want us to spend.
Yeah, there are a lot of different ways to think about budgeting. At the end of the day, we're all just trying to allocate resources to go to the highest priority. And within a year and within growth stages, like that shifts. You go through a time, I like to say, where you have big arms and skinny legs. Just use the metaphor of the person who goes to the gym and they only do biceps and say you're only investing in R&D in one part of the company's life cycle. But it's always that difficult slope you see at growth companies where you start deploying more to the sales and marketing side of the equation, and resources have to shift over time. And that does take a different mindset, I think, from people who are used to like, hey, what I'm building or what I'm working on my team is in the spotlight and getting the most resources.
Yeah, I agree. I think sequencing, pacing, cadence, knowing the right transition points, it's hard to get that right. Because sometimes investments all make sense, but not in the sequence that they're being recommended.
And part of that sequencing is just getting everybody aligned. And you had one called the Chief Alignment Officer. What's the Chief Alignment Officer?
Yeah, I believe that Office of CFO is transforming, and it has been over the past several years, taking on more operational roles. But I feel like when I'm doing the best job I can as CFO, the real work I'm doing is actually not prepping for a board conversation or creating a dashboard or holding a staff meeting. It is the behind the scenes work of aligning the founders, aligning my peers, aligning the people that are in the trenches doing the work. And the reason that alignment work falls to the CFO is we're often the ones that see and know everything. We see and know things some people can't see or know. And so we span across all parts of the business, and the founders look to us as trusted advisor. And sometimes we're the ones that are trying to pull everyone together towards the unified goal.
I also think part of alignment is going out and having conversations to fix things once you identify something's wrong. I was listening to a CFO on this a CEO actually on this panel, and he said the bad CFOs I've had will just come to me and point out everything they've identified that isn't working, things that are broken and not aligned. The best CFOs will go out, they'll have identified it, and they'll start to try to fix it, and they'll come back to tell me what's in motion by getting their fellow C-suite members in line and moving towards that, rather than just coming back and saying, this is broken, this is broken, this is broken. He's like, that makes my job so much worse.
Yeah, I love that. I love that concept. And it sometimes the intention of alignment ends up making you feel like you're creating misalignment, and you have to kind of double down and make sure your peers are not blindsided. You don't bring something up just in a meeting in front of everybody. You connect with them first. Hey, I've got this idea. I'm going to bring it up in the executive team meeting. Are you okay with that?
Can you say more about that? Because there is this kind of uncanny valley you have to travel when you're trying to explain to somebody, hey, I don't think we're in sync here. And you actually feel like you're falling further away from the person.
Yeah. When I first entered the role of CFO, you grow up through the ranks of that as a knowledge practitioner, and what you know is almost your capital, right? And knowing the most gives you more power, and having the answers at a moment's notice, it makes you seem savvy. But sometimes if you play that to the wrong way and you just kind of blindside a peer in a meeting in front of an important stakeholder like the investors or the board or the ELT, you quickly learn that is not the way to create mutual trust, because we can't do our roles well if our peers don't trust us. So you've got to bring them along for the journey and be receptive for feedback. Hey, you came in really hot on that. I don't think you fully understand the inner workings of my group. Here's what's actually happening, right? Being receptive to that feedback is part of playing the role of chief alignment officer well. You've got to check your ego at the door.
Yeah. I also think something that I learned as a CFO early on is I can dish it out, but I also have to learn how to take it. Like when people come to me to say like, hey, you came in too hot there, or maybe you didn't think about this part as much, just because I believe I have more information on it doesn't mean I'm necessarily always right.
Oh yeah, I'm ready to admit that I'm fallible and I don't necessarily have the facts perfect, and I'm just trying to figure out what we need to do as a business.
I also think that there's this maturity curve becoming a CFO where you do have the facts, you do have the concept of what needs to change or what needs to get aligned, but there's so much tact in delivering that correctly to somebody that's not going to put them on their back foot.
Yeah, I agree.
What does alignment actually look like in the trenches of a founder-led business? Is that just one-on-ones with the founders every day, or is it something deeper than that?
Yeah, it does require regular conversation, being willing to ask the hard questions. I am blessed with two founders that are very open to feedback. Nay, I say they are open to disagreement and hard conversations on an ongoing basis time and again. And that is not always the case. Mm-hmm. You don't always find that with your founders or the people running the business. But in my case at Tropic, the founders are very receptive. So you create that mutual trust. You create the opportunity to talk about things that aren't just project updates, to really work on the business and have the hard conversation. So I think alignment begins with mutual trust. Without trust, there is no alignment.
I like that. Russell, what are helicopter skills?
Great question. So I travel a good bit, and I don't know if you've ever noticed or thought about how long it takes when you're flying on an aircraft to land. The pilot comes on, the pilot's like, we're going to begin our descent into Atlanta. And 40 minutes later, you're on the ground. You're like, my gosh, we're going hundreds of miles an hour. Why does it take so long to get this aircraft down on the ground? I would contrast that with a helicopter, where a helicopter is able to go vertical and horizontal very fast, right? And, the analogy may break down a little bit, but think about that same analogy for your skills as a finance leader. You have to be able to enter a situation at a high altitude and go straight down to a very deep level very fast. It can't require that you take hours, weeks, months to actually get there. You got to get there very quickly and be able to go right back up to a high altitude. So it's about altitude of conversation and knowing what the right altitude is, and being able to enter a complex situation with the right context.
I'm so excited for this because there have been multiple analogies to something similar on the show. So we were talking to Amanda Whalen, the CFO of Klaviyo, and she said that CFOs have to be like dolphins, where basically you're going up above the surface to get a good view, take a breath, and then you're going back down into the weeds. And then a similar analogy we had was Jenny Decker up front, who said that you have to play eagle and you have to play mouse. You have to be able to soar around patiently observing, surveying, and then you have to be able to be the mouse navigating on the ground. And I think it has a lot of likeness to what you said about helicopter skills.
I would say those are apt analogies or corollaries to helicopter skills.
It's so funny. I always did wonder that, like, why does it take 40 minutes for us to go like 300 miles and also down?
I mean, I guess the alternative way of landing, I've been told for those that are in the military, military aircraft don't land like that. They land far more efficiently and quickly. But not every passenger would want to be on board for a landing like that.
Yeah. I don't know. Maybe it's the cabin pressure or something like that. Russell, you said that your secret weapon is curiosity, and you go on these daily data safaris. That's got to be on a bumper sticker, data safari for all the nerds out there. I love that. And so, what do? You go across all the dashboards. You just let your mind take you wherever.
Man, it's one of my favorite parts of my role that I'm actually paid to be curious about the business, to understand all the moving parts. But you have to go on the data safari. So yes, at any time, I have a gazillion tabs open because data it resides in so many different places. And I'm not just going to the ERP. So like the old way of CFO was likely you live in the ERP and you dissect that P&L a gazillion ways to Sunday and try to infer what you can about the trends and the percentages and the ratios and I don't know, like maybe this is outing me as a bad CFO, or maybe a lot of my other comments would, but I actually do very little of that, right? I have strong team members in accounting and finance that can tell me what the variances are. I'm going into other systems because I want to know what the inputs were that led to that. So the curiosity begins by saying like, what's going on with our funnel and what are the conversion rates? I recently was doing win-loss analysis, taking call data and running it through AI to get a summary of leading indicators of wins and losses. Why would a CFO want to do that? Is that my job? I mean, I'm not in theory paid to do that, but it gives me greater context into when I hear the challenges sales is facing, I'm better equipped to understand because I myself have analyzed the data and have my own perspective. So it's about broadening your knowledge set around what makes the business tick and operate. But it begins with like, I have a question.
I love how you broke it into inputs and outputs, because traditionally CFOs were basically keeping score of what was coming out of the ERP, the historical data, financial data. But like in order to understand why something ended up that way, you have to start with the inputs, which are usually product data and sales data. And I've gotten very comfortable with the sales data because I'm usually the one who's helping to build the quota model. It's the product data that at each company always takes me a bit longer to get my head around, but I find that's where like the real golden nuggets are as to where the puck is going.
Yeah, you're right. Like think about net revenue retention rate is an output metric. So if you just set out and say, we've got to go improve our net revenue retention rate, what do you do? Where do you start? Well, doesn't it start with, are your customers happy? Are they active? Are they using the product? Do they know it, love it, tell others about it? Is there virality? Like that unlocks all kinds of other questions you would ask about what is actually the input into whether or not customers are sticking around and growing with you. You got to go way upstream and be curious. And you don't always find what you think you're going to find.
I think a lot of times we take a compound metric at face value, like, oh, that's just the answer. But to your point, Russell, like net dollar retention has like 15 different levers in it. And if you want to change the output of what the number is, it's 105. I need this to be 120%. You need to go back upstream and deconstruct the levers to figure out why.
Exactly. Now you're talking.
Russell, I got to ask, how many tabs are open on your computer right now?
I do literally have about 30 tabs, maybe like 40 tabs, which is why people make fun of me that I use a Mac. I like the processing power and the stability, and I'd prefer to open up a computer that doesn't get worse every day that I use it. And I find that often is the case with PCs. Like, why do they behave that way?
I don't blame you at all. I've rebooted my trusty Lenovo 3 times today, so I'm
Oh, interesting. I haven't had to reboot my Mac in weeks. No, I do have a ton of tabs open because data is sitting in so many different systems. But there are some go-to tools that I'm in very often. Yes, one of them happens to be Tropic because that's what gives me a very good lens into our spend management processes and our variances and the requests that are coming in and where we're placing our bets. But the reason I have them open is they stay top of mind for me. I'm like, oh yeah, let me go in and check on our funnel. Oh yeah, let me go in and check in our ERP, in our customer sat scores, what's going on with our growth rates, pricing, discounting, on and on and on.
At the same time, though, I do think that more data doesn't always lead to better decisions. Do you feel like CFOs are also grappling with that, just like the sheer amount of data they have to process?
Well, have you ever noticed if you're in a meeting and a question comes up and there's any data attribute related to it, all eyes kind of like, yeah, Russell, about that. And you're thinking that doesn't have anything to do with financial data. So the irony is, and the reason why that happens is, yes, people whose living are made by using data all day and that enjoy using data, they do have a propensity and a proclivity to have a high aptitude of consuming the data. And so what do we have now? More data than ever. Everything is tagged. Every system is capturing metadata and enriching the data, and through APIs, it's all interconnected and being ingested and upserting, and like it can be very overwhelming very quickly. So I it's a pet peeve of mine when I'm like, well, we have no data. Like I'll hear that at times and I'm like, oh my gosh. And my peers will tell you that I'll say, we are flooded with data. The question is, what are we seeking to know from our data, and how do we interrogate that data? And how do we get to the heart of what the data is indicating?
What I also struggle with is when people bring their own data to a meeting, like it didn't all come from the same place. Because when that happens and you get into any sort of debate over how it was pulled or the definition of the metric, like I just feel like just cancel that meeting. Like the whole thing's lost.
Oh, I know. Well, and then people feel like it's a breakdown in trust. If the data can't be trusted, therefore whatever your team's presenting can't be trusted, therefore we're misaligned. And often it's as simple as a filter.
Yeah.
Well, what are you including in your data? What am I including? So creating a system of record and a single source of truth for various metrics is how you fix that. I mean, we want leaders to come forward with data and not just gut and intuition, but the alignment of that data and how you define those metrics is super important.
What are some of the ways that you've used Tropic even internally to cut through all the noise with the data? I would imagine that there's more in there than people think around procurement workflows, all the way down to the price for different things over time, historical data. How have you been using your own stuff?
Yeah, it's interesting because I joined Tropic being passionate about the spend management ecosystem and having used, to be honest, competitive products. And I thought I fully understood how broad spend management was because I was approaching it primarily from a what are the tools we have and how much do they cost perspective.
Right.
And what I was missing out on is the fact, and what Tropic helps do is intelligent spend management is about the entire life cycle of capital deployment, which begins with the request flow and having a system of record where all contracts are in one place and you know who the owners are and you know when they're coming up for renewal. And when a request comes, you know if the price you're being quoted is a good price. You can find out how to negotiate with this vendor. What are the ways that the supplier could come back with a better price, and benchmarking that against your peers, right? And then the collaborative part of it, of where you can see, because CFOs, we're always at the end of the approval chain.
Yeah.
Right. And even if you have good helicopter skills and you can jump right down, how do you quickly come up to speed on all the conversation that has been had about this investment? In the old way, you'd be reaching out, slacking people, emailing people, calling them up. With a system like Tropic, what I'm able to do is see the entire discussion flow. They did ask this. Oh, cool. They did run a price benchmark. Here's how it came back. Here's how the supplier responded. And so I mean, that's just the tip of the iceberg of ways that Tropic helps me as CFO.
I guess more broadly, what you're getting at is capital allocation decisions.
That's right. And it's bigger than just software tools. The people that are using our product and getting the most out of it are using it for more than just managing their tech stack spend.
Because if you think about the levers within a business, just to bring this full circle, like 70% or so of costs walk on two legs, right? But those are also your leading indicators and the kind of like, I guess you'd call it the atomic unit for forecasting a lot of the software spend. If you want to move the needle outside of people, you really do have to understand those tools, because then you get your cloud spend, you get some travel, you start to look for spots in the business of where you can move some chips around. There's a big bucket right there.
Oh, so true. And just knowing that you're looking at the full picture of your spend management, integrated with your ERP, matching up to your transactions, so you're not wasting time doing that. It's how you get the broadest view into how your company's placing bets, to your point.
I think one of the misnomers when people bring up cost management, spend management, Russell, is they think it's just like this control function where you're trying to optimize just for cost savings. What's the linkage, though, to revenue growth?
Man, I love this question. I also see debates going on about people that push back against the notion that finance is a cost center. Yes, Of course, I understand that where we sit on the P&L classifies us as a cost center with no revenue attribution. But I don't want that to be an excuse for teams that I manage to not be hungry about growing revenue, because I do believe that the CFO and that a finance team can be one of the leading drivers of growth in a business. Because if the engine of business is all about capital deployment and identifying the levers and leakages, placing those to the center of table, figuring out where to place your bets, reallocating them as necessary, using helicopter skills to come in and pivot where you need to. If that is the name of the game and you do that better and your investments are paying off at a higher rate, you have more money to reinvest in growth into the engine. So it creates this flywheel of inertia that helps grow the business. So I do believe finance can drive growth, not just efficiency.
I get frustrated when people talk about spend management as just a view into cutting costs. I'm managing the spend, which can also mean I'm spending more on something because I see it's working.
Yeah, because when a request comes through in Tropic for my approval or review, I don't go straight to just, what's the price and do I sign it and are we saving money? I'm first reading the rationale as to what are we actually solving for and what are we hiring this investment to do? And what's the rationale there and what alternatives did they consider? And so when you unlock that part of intelligent spend management, you're actually talking about it's the single pane of glass view into where a company is placing its bets strategically as a business.
And to link it back to the safaris that you take through all the data dashboards, you may get a request for, I don't know, demand gen spend, or let's say it's a dinner for procurement officers, something like that. You can trace that back to the customer acquisition cost of what's coming out of those things. So you may actually go back to the team and say, I think this is great you're spending it on this. Have we ever thought about doing more?
Yeah, that's right. Because rather than just relying on data in the ERP and kind of reactively looking at it, you see the full train of thought around what led to requesting that investment and closing the loop on how did it pay off and why are we wanting to renew it this year? And it just creates a full cycle collaboration around how you're spending money as a business.
I recently did this tech stack survey, and in it showed that more than 50% of companies that are under, call it 100 million in revenue, are not using any sort of procurement tool whatsoever. And that part blew my mind. Like when I think about how risk averse CFOs are, can you wrap your head around that? Like, why are CFOs who wear a belt and suspenders to work proverbially, like, not getting a spend management tool?
It is mind blowing, and I hear from peers, companies that we believe would benefit greatly from Tropic, when I seek to understand why they might be pausing or delaying an investment, and they inevitably say, well, it's just not a priority, or we don't have the resources, or we're focused on other things. And I feel like appealing to them just as a friend and a CFO, not as CFO of Tropic, and saying, do you understand that the best way you can help move your company forward is by improving the visibility into these things? Like, it's never too early to modernize your spend management practice. You're never too small for that. I mean, think about it. We teach our kid. The only way my son was able to invest and buy me this poster that's been autographed by every cast member of Empire Strikes Back was he planned ahead of time. Now, is he a big company with a P&L? No. But he's like, how much does that cost? And how much capital do I need to deploy to buy dad that poster? And do I have that capital? Is it worth the risk to bid on that on eBay? And so it's no different as you grow up as a company. Inevitably, you're still taking scarce resources and allocating it and trying to maximize that allocation. So the time is now. You're never too small.
I like that. Russell, we're going to take you into what we call our long ass lightning round.
Okay.
I ask every successful finance professional on the show, what's one thing you've screwed up on the job before?
Oh, wow. Great question. And I think I've screwed this up multiple times. I mean this sincerely, which is alignment with the investors. And why I say that is, as CFOs, as an operational CFO, right? We're not publicly traded, so I'm not spending my time outside managing Wall Street, managing that side of things. I'm in the business. I'm working on the business. I'm trying to create alignment with my peers and create alignment with the founders and managing my team and finding levers and leakage. And what I find is if I do that and over-index there, I can forget we have investors that I need to stay in touch with and stay aligned with. And so I think the times that I've gone off the rails as CFO have been the times that I've done a great job managing up, down, across, but the investors are only hearing from one other entity within the business and not directly from me. And that's on me. If I'm not building that partnership with them directly one-to-one, that's on me. And I continue to need to do a better job of doing that.
It's funny though, because I've also had CFOs tell me the opposite, where they over-indexed on being externally facing. And so like they lose sight of what's going on, like what the ground truths are in the business, because they're so concerned with that next fundraise, even if it's not coming up, or selling the company, even though it's not like a real event that's approaching soon. And like they lose the micro because they're so consumed with the macro outside the business.
Yeah, it's ironic. So I'm the exact opposite. I think I could probably be in the top quartile, top decile. I'm top 5. I don't know. I think I can run with the best of them being operational. And anybody that's ever had me work in a business would tell you, like, people joke. It feels like Russell's in every spreadsheet, every tool. He knows things before they even materialize. But yeah, I've got to also manage the investors as best I can. So it's about balance, I think.
That's a really good one. Russell, I did not have this one in the question briefing, but I feel like there's no better person to ask than somebody at Tropic. Auto-renewals, you got to keep them or kill them. Mm-hmm. As someone who's both a buyer and a seller, do you think auto-renewals are a good thing?
Well, as a CFO, from a revenue generation perspective, we love them, right? But what we don't want to do is see people feel like they're held hostage, right? That they have to renew simply because we gotcha, the auto renewal language. But yeah, it's a great question. I think from a revenue generation perspective, I love it, and from an expense leakage perspective, I hate it.
Yeah, and that's why it's a hard question. That's why it's a spicy question. I don't know, because I've made some of the biggest screw ups in my career are actually letting things auto renew that I just didn't have visibility on. But at the same time, I've worked at SaaS businesses where like we would have had to hire hundreds of more people if we didn't have auto renewals just to keep the lights on.
I mean, the thing is, like, it's easier to say I'm pro auto renewal because with a tool like Tropic, we stay on top of them and the expenses don't catch us by surprise.
Russell, if you could tell your younger self something knowing what you know today, what would you tell him?
Stay calm. Don't feel like you have to have all the answers. It's okay to say, I don't know. Let me ask my team. Can I pull them in? And realize that the questions people are asking are not always an affront to your expertise or experience. And my younger self kind of perceived any question coming into finance is they're challenging us. No, they're embracing in the process. It's a two-way dialogue. So questions are good, Modeling cycles are what we get paid to do for a living. So embrace the cycles, embrace the conversation is what I would tell my younger self.
All right. Can you walk me through your finance software stack? What tools does your team use to get the job done?
We're now on NetSuite as our ERP. We use Carta from an equity management perspective. Clary is used in terms of like pipeline metrics and pipeline analytics. Everybody would say they're using Salesforce.com. Of course, we are as well. And probably interesting that I'm answering tools outside of the traditional finance stack, right? But I take you back to my comment about how I've got all these tabs open. Navan is in our stack, Anrock from a sales tax compliance perspective, Soligo to do kind of like those workflow automation type of things, and most recently, Abacum.
That's awesome. Julio and the team at Abacum are great. Last one I got for you. What's the craziest thing you've ever had someone try to expense?
Yeah, so unfortunately, they were buying a bunch of gifts for their children while they were traveling on vacation, but it wasn't a one-time thing. It was a repeated thing that we identified, and we were like, why are you doing this? And they said, I thought when I traveled, it was, my right to get my kids something, it's like, oh my gosh, no, we can't do that. So
yeah, I have a 3-year-old and she gets pretty angry at me when I travel for work. So I try to get her something in the airport or wherever I go. We went through a phase where I was buying her finger puppets in every city we went to, and then I was coming back with them, but I did not expense them. That wouldn't have been good.
I was going to say that's being a good dad unless you put it on the company credit card, and then that's not a good idea.
A step too far. Russell, this has been a blast. I really appreciate you sharing your insights and carving out time for us.
Yeah, thanks so much for having me on the show, and let's keep the dialogue going. Looking forward to another one in the future.
Absolutely. Part 2 coming down the pike, folks. All right, thanks.
Run the Numbers is a mostly media production. Yelling and intro by Fat Joe. Artwork by Meg D'Alessandro. Show is executive produced by Ben Hillman. Nothing said on this podcast is intended to be business or investment advice. It's the sole opinion of me, a guy who feeds his dog way too much ice cream and has a history of net operating losses. LOL. If you like this podcast, hit subscribe and give us 5 stars. It will take like 2 seconds and our algorithm overlords love it. Drink water, call your mom, and have a great day. Peace.